What's up everybody, this is Agent Rez and welcome back. Today I wanted to talk about what it actually costs to buy a home. This is a question that I get all the time. I really want to show everybody that it's possible and you don't need as much money as you probably think you do. Before we get started, I want to mention that I work in the Fort Bragg area, which is in Fayetteville, North Carolina. So these numbers can vary dramatically from market to market. To break it up, I'm going to separate the cost between upfront cost and at the closing table. So with that being said, let's get right into it. In the beginning, before anything, you're gonna wanna determine how you're gonna pay for this house, whether it be cash or with a loan. This video is assuming that you will be using a loan like the majority of us. The realtor that you choose to work with will show you the homes, negotiate the terms, write and submit your offers. Once all terms are agreed upon and both parties have signed, you have a contract. And this brings me to my first upfront cost, and that's earnest money deposit and due diligence fee. Both of these are negotiable, meaning it depends on a lot of different factors. For example, is there a lot of interest in the property? Does the property have offers already? This is a category that you can be aggressive and can help you win in those specific times. I mention this because we are in a very competitive market with everything going on in the world. Typically what I see for both of these is anywhere between $0 and $1,000. For this example, we'll just use $500, which is right in the middle. As a side note, earnest money deposit and due diligence fee are credited back to you at closing as long as you close. Meaning if you spent $1,000 up front, you should have to spend $1,000 less on the back end. Once you have paid these, you are officially under contract. Something else that your realtor will negotiate for you is a contingency period. In this market, we call it the due diligence period. It can be as long or as short as everyone agrees to. I've seen 3 days and I've seen 4 weeks. This usually starts immediately after the contract is executed. This is when the buyer has the right to inspect as little or as much as they like. Which brings me to my second upfront cost, inspections. The biggest three that I recommend is the home inspection, the termite inspection, and the HVAC inspection. HVAC is just a fancy acronym for heating and air system. These aren't the only ones, but they're the most common. It all really depends on what the house has. If the house has a septic tank, a well, lead-based paint potentially, these are all things that I would recommend investigating as well. The three most common would run you about $400 for a home inspection, $50 for a termite inspection, and about $75 per unit for the HVAC inspection. I just want to make it clear before we move on, none of these inspections are required with the exception of the termite inspection for a specific loan product, but they are highly recommended. These are things that I would do myself with any house that I was gonna buy. After inspecting the property, it's time to order the appraisal, which is the third upfront cost. This depends on the lender and the loan product, but generally what I see is about $500 for the appraisal. The appraisal is really just for the lender to see and make sure that they are not lending you more money than what the house is actually worth. So in upfront cost, you're looking at about just over $2,000. At this point, you're done with upfront costs, and now the attorney is working with the lender to get the file to closing. The first one we're going to talk about at the closing table is going to be closing costs. This includes attorney fees, lender fees, origination fees, title insurance, prepaids for your escrow account, and a lot more. A gauge that I usually give people is usually about 3% of the purchase price for your closing cost. I always ask the buyer to verify with the loan officer, and I usually verify with the loan officer as well. So for a $200,000 house, you would be looking at about $6,000 in closing costs. I know what you guys are thinking right now. You're saying, Jesus Christ, $6,000? Yes, $6,000, but here's the good part. Sellers are generally willing to help buyers with closing costs. Like I mentioned in the beginning, this is also negotiable. Just recently in April, I had a transaction where a buyer purchased a $240,000 house and received $7,000 in closing costs from the seller. That covered 100% of the buyer's closing costs. In that example, the buyer actually walked away from the closing table with money in his hands. The amount was pretty close to what he had put up front with his deposits and due diligence fee. Now, these instances don't usually happen, but in his situation, he did really well. And last but not least, this leads us to our last cost at the closing table, which is down payment. Your down payment is strictly dependent on your loan product. Some of the most common loan products that I see most people using in my area is VA, USDA, FHA, and conventional. And the down payment can range. VA and USDA are both 0% down. FHA is 3.5% down. And recently I've seen 3 to 5% for conventional. So that's it, guys. That's what you would need to buy a house. I really hope that helped. If you have any questions or need clarification on anything, just let me know in the comment section. I look forward to interacting with you guys. Thank you for watching. Make sure to like the video and subscribe for more real estate content like this. See you guys in the next one.